please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, very good afternoon. You're watching Your Stocks on CNBC Tv18. I'm Ekta Batra. With me is Nigel D'Souza, and it's turning out to be a day where we're going from strength to strength for the market. So we did surpass 11,000, that big record level, but we've only built on our gains. That's quite surprising in terms of a trend that we've seen otherwise, where we just managed to hit that record high and then we sort of scale off from it. But it seems as though the market is much more confident this time round of further gains. So we're currently up around 103 odd points for the Nifty and 300 plus points for the Sensex at this point in time. And we have all of the indices, mid-cap index, bank Nifty and the Sensex, all of them gaining with gains of around 1% at this point. And advanced decline ratio a bit weak, a bit sluggish. It's off the day's high, but nonetheless still steady for the broader market.
Absolutely, Ekta. If you pull up the advanced decline ratio, that will tell you the picture. In fact, though the headline index is moving higher and every dip is being bought into, the advanced decline ratio, well, we had more advances than declines, but in the last 1 hour or so, those lines, they kissed each other. Now we have a few more declines in advances, but you can't really follow this market. If you're looking to short it, you'll be taken to the cleaners. The bulls, they're doing very, very well. While in fact, the bears, they've been running for cover. Remember, expiry week as well. So we'll see plenty of short covering. Volumes as well on the higher side. If you pull up the total volumes, well, we are already done 35,000 crores in terms of cash market volumes. And the total volumes are nearly around 7.5 to around 8 lakh crore. Telling you it's been a very, very high volume day. And in fact, by the end of trade, we'll definitely be looking out to see what the institutions were doing, given that the cash market volumes are already 35,000 crores and we still have 90 minutes till in fact we pull the curtains down on today's trading session.
Those were the top stories that we're tracking at this point in time. But the one company that is on our radar is Can Fin Homes. That stock is off the day's high. In fact, it is down around 2.7%. You'd have to say it was a bit of a sluggish set of numbers this quarter when it came to parameters such as loan growth. We have the management with us. We have Mr. S.K. Hota, the MD of Can Fin Homes, who joins in to discuss the performance this time round. Mr. Hota, hi. Thanks very much for joining in. Well, while this time round, you can't really fault what's happened with in terms of asset quality as well as your profit figures. I wanted to start this conversation by asking you about loan growth. If you look at the parameters in the past couple of quarters, you've scaled off from that, 28 to 25% loan growth that you used to do to, I think, the lowest that you've done in the past 6 odd quarters at around 18 to 19 odd percent. Still high, but not as much as what you were recording earlier. Can you just tell us what's happening with that parameter and what can we expect going forward?
Yeah, good afternoon. As far as the loan book growth is concerned, I would like to remind that yes, last year till Q3, it was a normal year. Because post demonetization, the growth slumped from Q4 of last year, and current year Q1, Q2, Q3, if you see, I see there is a positivity, because post demonetization, whatever the growth had come down, there is a positive growth going forward. Only when you compare year-on-year basis, we are comparing a post demonetization, post RERA, post GST number with a normal year, which is the base figure was a normal year's figure. So that is why year on year it looks that way. But I will give another comparison to it. If you see the new approvals for the company, this quarter we have got quarter on quarter compared to for the Q3 year on year. If you compare last year Q3 and current year Q3, there is the new approvals have gone up by 14%. Disbursements have gone up by something like 9.5%. Compared to Q2, the Q2, both these numbers year on year were 4%. And if you see Q1 my fresh approvals were flat. So post demonetization, for Q1 of current year, there was no growth. We were finding it difficult to hold on to the last year's approval levels. Q2, we posted a 4% growth. This quarter Q3, we have posted a 14% growth.
So exactly, Mr.
Loan book growth, if you compare, yeah, I see a positivity that way, because
Okay,
Yeah,
Mr. Hota, I take your point, but you are coming off a low base, I assume, in terms of loan growth in any case. But, you know, just talking about the disbursement figures, it's been a little volatile if you look at it. It's down to around 3 to 4%, like you mentioned in Q2. It spiked up back to around 9-odd%. Why is that, and where do you expect
going
it to
forward,
stabilize?
it will go up. Yeah, going forward, it is going up. It's not volatile. It's going up. The disbursement figures are going up because it comes from the fresh approvals. If you have got fresh approvals, fresh inquiries coming, that shows the trend. And as far as my company is concerned, Canfin, predominantly we are south-based. If you see Karnataka particularly here, because the RERA stabilized a bit late, it is taking shape now. The customer confidence, if you see the investors, genuine home buyers, confidence and all, things are looking up very positive.
So where
now.
will we average?
Elsewhere, wherever. Pardon?
Where will we average when it comes to loan growth and disbursements, at least for the second half of the fiscal, sir?
The second half of the fiscal, if you see, that's what I am telling. If the loan book growth for current quarter, if we are posting a 19% growth, I think this is one of the very fine. We are satisfied because we are seeing a positivity.
Okay.
The loan book growth, arithmetic says it is less because the base figure was a normal year's figure. But if you compare quarter one, then there is no fresh sanctions and fresh disbursements. I am not that worried as far as the loan book growth is concerned because the new approvals, the disbursements, those are looking up.
All right.
It is only arithmetic. If you see the quarter one of next year, all of a sudden you will find that this growth rate has again come back to something like the phenomenal 25-30% growth.
Okay, all right.
Again, it will be because of the base effect. Yeah.
Well, Mr. Hota, you are satisfied, but it appears the market is not very satisfied because your stock has come off close to around 5% from the high point of the day. But just hold on to that thought, sir. We have some numbers coming in from Force Motors. There's a good growth that we're seeing on the top line. Even the EBITDA number is looking quite good. So I think we should get both those two numbers up for you. The net profit is seeing a bit of a downtake, but I think that could be some one-off for them because otherwise the top line grows by around 19 to around 20%. We had the EBITDA number as well that was flashing on the screen. That has grown by around 57%. So operationally, there's no real problem with those numbers. The net profit, though, that's sulking. We'll have to find out exactly the reason why. The margins have expanded from around 4.6% to around 6.1%. So the numbers operationally look quite good. We'll get back to those numbers. We'll continue chatting with Mr. Hota of Canfin Homes. Mr. Hota, sorry for that. We just have earnings season, so a lot of numbers that are coming in there. But I wanted to ask you, sir, you know, as my colleague Ekta was just asking you, for FY19, FY20, what kind of sustainable number we can look at in terms of AUM growth as well as disbursement growth? You said that you're satisfied. The market clearly is not very satisfied because the stock has come off the high point of the day. And also, sir, the second part of the question, how focused are you on affordable housing segment? If you could give us some idea there.
Canfin Homes, as I have told, I think in the previous quarters as well, almost 91% of my portfolio comes in that lower MIG and that is MIG1 and LIG segment. We operate in that segment where my average ticket size is 18 lakhs for housing loan, and non-housing it is something like 9 to 10 lakhs. So almost my entire portfolio and the new approvals, if you see, all are in that affordable range. So we are there in that particular segment.
In terms of, sir, in terms of this housing, affordable housing segment, I want to ask you how many customers are financed under the PMAY, that's the Pradhan Mantri Awas Yojana scheme.
The Pradhan Mantri Awas Yojana, the first one was the CLSS, that was for LIG and weaker sections. We don't operate in weaker sections, LIG only we are operating in. MIG has come in now. In that segment, particularly in LIG segment, one issue was the supply side issue. Because most of the inventories, those were there lying unsold, were in upper segment. That is of MIG, which suits into the MIG1 and MIG2. Going forward, now we see a lot of traction in that area because the existing inventories, whatever were there, after expansion of the carpet area norm under this CLSS, we see a lot of positivity in that segment.
Okay. Mr. Hota, just touching upon a couple of other parameters, your net interest margins are maintained year on year, but it's come off on a sequential basis. So where do you expect it to probably be maintained, at least for the foreseeable future? And a similar guidance in terms of the gross NPLs. What happened when it came to asset quality this quarter?
I suppose asset quality, again, yes, the market is witnessing almost it's a general trend. that when growth, year-on-year growth, when the denominator growth is not as much in percentage terms, it appears it is going up. So that way we are still then, I suppose, at 0.46% our gross NPA is within the manageable range, and it is one of the finest. And when it comes to the margins, I'll say that yes, for last almost successive 6-7 quarters, we have been holding around and above 3.5%. We are comfortable around that range.
All right, Mr. Hota, we're going to leave it on that note. Thanks very much for joining in and speaking to us. So that is Canfin Homes. But now let's cut across to Shireen Ban, who's in conversation with Sumant Sinha, Chairman and CEO of Renew Power, on the sidelines of the World Economic Forum in Davos.
Well, a little more than an hour to go for the Prime Minister to address the plenary session here at the World Economic Forum's annual summit. Joining us on CNBC TV18 is Sumant Sinha of Renew Power. Sumant, appreciate you joining us here on CNBC TV18. What's the expectation from the Prime Minister? What's the mood like? People continue to be upbeat about India, but in terms of specifics, what is it that they expect?
Well, you know, I don't know that at this kind of a setting, whether you expect anything very specific in terms of policies. I think more the expectation is around overarching themes. And I would say there are really two different types of themes that can be talked about by the Prime Minister. One is domestically, what does he intend to do? And what is his philosophy? For example, is he going to say anything about his views about the private sector? Or how the election, or how the economy is going to be managed in the lead up to the elections, for example. Will there be populist themes that might emerge? So I think people are going to be looking for those kind of things.
What about stability? What I've been given to understand is at the dinner last night, a lot of investors made the pitch to the Prime Minister that, look, whatever you've decided to do, you've done, but let there now be some stability, especially when it comes to taxation, GST, etc. How important is that message going to be?
No, of course, it's very important. I think all investors look for is stability of policy making, stability of taxes as well, of course. And I think that's an area in which India has had a lot of volatility in the past. So I think that's one specific area that people are going to be looking at. And I think also, is there anything further going to happen on the foreign direct investment area? Is that going to become a little bit easier? And so on. So I think that's one clear area. I think the second big area that people are going to be focusing on is are there going to be things that the Prime Minister talks about in terms of his own philosophy about the world? You know, we've had this whole thing about the liberal world order, the US vacating its position in the economy, in the global economy. Last year Xi Jinping said that he was happy to pick up the mantle and take over. So where does India stand in all of this? You know, what does India believe about some of these issues? Are we just a bystander? Are we going to take whatever developments happen? Or are we going to actively work towards creating an open environment and a global order, which is something that we have in the past not really done. But Prime Minister Modi has a very different kind of a standing, I think, in the world order. And I think he can use that pulpit, that positioning that he has to really enunciate his own views on that. And I think that is something that people are going to be looking for as well.
Let me talk to you about your business in specific. You've just done a deal with CPPIB. $144 million is what they've invested. They bought out the ADB stake in the company. What next now for you? How soon before we see you headed towards an IPO?
Well, you know, Shireen, I really can't talk about that, as you well know. But I think clearly, we look at various fundraising options all the time. And I think in that context, we'll be looking at certainly the public markets. We're doing a lot of things on the debt side, and that is something that is not well appreciated because 3/4 of our capital structure is what we do on the debt side. And we've done a lot of innovative transactions there. Most recently, we've done this cross-collateralized bond issue, which got a rating of single A+, allows us to bring down the cost of capital, which is very important in the kind of competitive environment that we're in. If you can bring down the cost of 3/4 of your total capital, allows you to offer better tariffs, allows you to keep the cost of energy low.
So you're not going to tell me whether you're looking at an IPO anytime soon?
I think it's something that we've talked about a lot, Shireen, in the past. I think, there are various things that we have to look at.
Deals? Acquisitions?
Of course, those are happening all the time, right? It's a market in which a lot of people are looking at selling their assets. I think a lot of the smaller players who are sub 1,000 megawatts recognize that This is not a market where they can now operate. It's a market which is moving towards scale, and therefore there are going to be inevitably the consolidation acquisition opportunities that will happen, which we're already looking at, and we've done a couple of transactions. Hopefully we shall do a few more as we go forward. But I think if you look at the sector as a whole, the scale is changing, right? We're now going to be having, in the next wind auction that we have, the maximum that you can bid for is 500 megawatts, which is a $500 million investment.
Keep an eye out on the markets. A few stocks, they're seeing some profit booking. Yes Bank is an example. That stock has come off the high point of the day. Bharti Infratel as well is seeing some selling pressure, and HPCL as well is moving lower. But otherwise, it's a day for metal stocks. They are shining in today's trading session. The index is up close to around 4% odd. CNBC spoke with Anil Agarwal, the chairman of Vedanta Resources, to find out his expectations from 2018.
There is no new oil well is coming. And if you see there is a gap, and I see this is a real price, even if you see the metal, you know, the zinc is high, the copper is high, there is no new mines are coming. We produce largest zinc in the world. So I'm not bearish, I'm bullish by and large. Demand is not going to go down. India, the way Mr. Modi is talking about, you know, he's looking 10% growth in the metal commodities, and he's looking 7% growth GDP. There has been no less consumption, whether it's oil, whether it's a commodity, whether it's a steel. So on the back of China, you will see how India come up. We are the only company in the commodity in India which produce oil, copper, zinc, iron ore. So this is very interesting time for us.
11,050 for the Nifty currently. Well, it can be quite tongue twister considering the amount of record highs that we're making. But nonetheless, joining us this afternoon, we have Rajat Bose on the fundamentals and Mayuresh Joshi to answer all of your stock queries on the technicals. Don't have much time, so let's get going in terms of the first question that we have. Ashish Sharma writes to us from New Delhi, holds 250 shares of Indiabulls Housing Finance at 811 rupees, so sitting on a profit right there. Medium-term investor wants to know whether to hold or sell. Mayuresh, over to you on this one.
Afternoon, Ekta. So clearly, I think the numbers are around the corner, but strong growth has been exhibited in terms of both AUM and the kind of spreads that they've been reporting. The interesting aspect here would be the incremental spread commentary from the management. They did indicate at the end of last quarter that incremental spreads can be in the range of 2.75 to 3%. But AUM growth should be extremely strong on a year-on-year as well as a QOQ basis. There should be stability in spreads happening. And again, in terms of asset quality as well, there should be stable numbers reported both on the GNPAs and net NPAs. My own sense is that GNPAs should be below 1%, which has been the trend even in second quarter. So largely, again, I think the AUM growth trend, the RERA impact, the incremental spreads is something to watch out for. But from a long-term perspective, the investor can clearly hold on to this.
Okay. Rajat, quick word.
Quick word would be that if his horizon is short to medium term, then a close below 1340 he should book his profits. Otherwise, the chart structure suggests that if he were to hold it for the long term, he should continue to hold.